Good morning, folks. This is Anne-Marie. We're taking a look at SPY for the week coming up here. We'll take a look at a couple of things. Right now, we've got these very nice, clean Heikin-Ashi bars. We can see a little bit of widening action here, but notice a lot of people calling for downside movement, upside movement. We're rolling. Folks, we are not in a resolution space. Very, very sideways. What you need to do is establish clear levels of range for support and resistance and trade according to those ranges. If we take a look at regular candlesticks, we can see it looks a lot messier, but we could potentially be building some sort of diamond pattern if we can come in and make the days a bit smaller, right? So we've got this angle here, this angle here. Let's see what the range is like. Pre-market this morning is very, very tight. The market seems like it's waiting on some kind of resolution. We're very far away from the 50 on the daily still, and so that is going to give us a little bit of pause as either the 50 comes up or the market pulls in just a little bit. To me, this seems like a likely space for us to eventually come into that 173.45. If we come down very quickly into, say, an hourly chart, let's figure out what it is that we are looking at. We can see that things get a little bit more cramped. Right, here's the VWAP. We are sitting above everything, but notice the V-shaped formations over the last little bit, right? We are having very steep moves down and then a retracement, steep move down, then a retracement, steep move down, then a retracement. Charts are very choppy. It's extremely difficult when you're taking a trade long. Even though, let's say you took a breakout right here, if you'd held it long enough, you'd make profit. The problem is the sharp, jagged moves down and the sharp, jagged moves up. Very difficult for you if you're a swing trader, short-term swing trader. This is very, very annoying to you. On top of that, you can see my favorite momentum indicator is showing flat momentum. Nothing super strong in any measure. And when it's sitting like this, it really does mean that it moves sideways rapidly. So what do you do as a trader? Put up those pivot points, watch for it coming into support or resistance, and when it comes in and begins to reject, take the trade. The trade on the edges in the opposite direction of the perceived breakout has been the winning trade if you are moving very quickly. How difficult is that though, right? What we think it's doing, what it looks like it's doing, is not what it's looking like at all. So how do you prevent yourself from getting into that space? Very simple. You let it confirm. What time frame should I let it confirm on? It depends how quickly and how actively you trade. Frankly, 5 minutes, very, very fast time frame, but it is certainly telling us, hey, I probably ought to wait until I am confirming candlesticks up and out over my region. It's as simple as that. Honest to goodness, trading is not a naturally convoluted thing if you look at it in its most clean sense. We tend to make it extremely complicated. And so what I'd like for you to do is just do what I had to do for myself. You just got to dumb it down. Just dumb it down for yourself. This is what I had to do for myself anyway. I had to dumb it down. So how do I dumb it down? I look for appropriate support and resistance. I wait for it to break and hold. And then I establish where a clean line of my stop should be. And I watch it. And as long as I don't break that, and I continue to move upward, I can stay long in the trade. And that is all we need to do as traders. And today, if we set ourselves up to take a look at what's going on, we can see that we've got ourselves movement sitting right above resistance level 1. We've got noise sitting here. We know sellers are at this 177.39 area. If we pop up over that, we've got about a 20-cent move to the north. Now, if you're playing options and you can use size, that's a pretty nice trade. That's a pretty nice trade. You can get yourself doing something there. However, if you're not looking for choppy action where you're going to have to make a decision 5 minutes later, 12 minutes later, 15 minutes later, wait for the breach, hold, and ultimately the retest of the event, right? Notice you've got a breach, no hold, but there is a retest. A positive retest gives you the ability to move in the direction that you want to move. All right, that's it. Hopefully you can use what it is that I'm telling you here to pace yourself. Bond markets are closed today. Volume should be a bit lighter. I certainly will not be trading as actively today myself, but when you are sitting in there, it's as simple as saying, where are the buyers and sellers sitting? Can I get up over the top of the line of sellers so I can start off with a new line of buyers coming into this 200, it looks like, for the IWM. But again, if you take a trade on a breakout in this environment and it has not confirmed in 2 or 3 candlesticks, you're sitting on the wrong side of the trade. It's as simple as that. Honest to goodness. If it has not done that, or if it pops out, comes back down to your area that you got in, and it cannot hold it, meaning it takes 1 candlestick there and begins to fade, do not stare at it like a deer in the headlights. Get out. You can always get back in again. It is better to lose $50 in commissions than $500 in a failed movement down into your stop. Yeah, it sure is. It sure is. We're so afraid of that commissions event. You go, all right, I'm going to hold it. You've got to think about these things logically, work through them, and say, be willing to go, wow, you know what, my timing was wrong there. Let me see if I can get back in and get back out. Or I can get back out and get back in. Just as simple as that. The last thing I want to tell you is when you look at a chart and it is holding a range for you, but it has not confirmed the breakout by moving up above relative resistance, when you enter that trade, enter quarter size. Enter quarter size so you've only got $10 in commissions if it breaks down, or if you're willing to hold that heat, you've got $200 maximum in a loss if you believe that rhythm is what you're actually following and not price level. Okay, because those are actually 2 different things. If you follow market rhythm, you're watching those waves. If you're looking at the price levels, you're just seeing whether it holds or not. Frankly, good trading involves a combination of both of those, but a lot of us haven't really developed that. Anyways, that's all I got to tell you for that. For today, we're sitting between the 50 and the 200 in the IWM. That's going to be pretty noisy. V-shaped formations here. Pretty solid retracement event, but a lot of support sitting here. Monthly VWAP, weekly VWAP, 50, daily VWAP. The whole shebang sitting under here. It's going to be hard to lose this level. All right, so be very careful. If we do lose the level, it means that we have overcome all the buying support here, and we should easily move down into prior support. All right, take care. Good luck trading.